Hi everyone, my name is Tabitha. Welcome to my YouTube channel. Today I'm going to talk about net worth. We have personal net worth statement. This is a listing of all items owned, assets, and all amount owed, liabilities, and plus the net worth that make up that statement. A net worth is calculated by adding everything of value that person own, which is the assets, and deducting all the money owed. Anything that a lender has given you is the liabilities. It's not your money. They need it back. So and then that give you net worth. This picture shows you how you get net worth is the assets minus liabilities give you net worth. The money left when you sell all your assets and then pay all the people that you borrowed money from. Whatever is left is your net worth. For you to have that net worth, you have to have assets and you also have to have liabilities. Or sometimes your liabilities can be zero. So which means you can have your asset minus zero, which give you net worth. Personal assets are things like saving, TFSA, which is tax-free saving account, RRSP, registered retirement saving plans, salaries and wages, 401k, stocks. All these are your assets. Your assets your assets. Sometimes you can put your house inside there too. And then you have your liabilities, all the money that is not yours. You borrow some money to buy some goods. It can be consumer goods. It can be for business. So a lot of people have line of credit. Others have credit card. Others have car loans. Others have mortgage. So if you get these assets minus liabilities, and then you will get your net worth. Your net worth, the money left after you sell your assets and pay all your lenders, those who lend you money up front, and then whatever is left is your net worth. When preparing this statement, you have to know where to record which accounts. So here we have asset minus liabilities give you net worth. In other words, if you get the difference between that assets and the liabilities. This value called net worth can be negative. It's negative in sense that if your liabilities are too many than your assets, if you like borrowing a lot, and then your net worth will be always negative and your financial situation equal to struggling. When you have a positive net worth, it means you have more assets than your liabilities, and in this case your financial standing is much better than someone who has a negative value. step to follow when you're preparing the net worth statements. So you have to know the assets, liabilities, net worth, or calculate your net worth if you were not already given. Now you can record assets on the left side in the order of liquidity, which means the ease to convert that asset to cash. And then you record your liabilities and net worth on the right side. The relationship of this statement give you what people call accounting equation, which means um, assets equal to liabilities plus net worth. So let's assume we are drawing that line here. So you have your asset on the left side and you have your liabilities and net worth on the other side. We have more examples of assets and liabilities. We can have a car, you can have furniture, you can have inventories, you can have computers, you can have bank's loan, you can have mortgage, credit card as liabilities. But when it comes to a car, it depends whether that car is giving you money, is making you money, or you're just using it. When it's a consumer good, and then you must as well like maybe say it's an expense instead of assets. Net worth statement example. Let's do a real life example about Bill Gates. Bill Gates has some assets and some liabilities, and we need to understand what is his net worth. Is it negative or positive? And how can he improve to have a positive net worth if it's negative? In this example, a net worth statement will be prepared for Bill Gates as of December 31st, 2002. Bill owned a house valued at 200,000, which is asset, and has a mortgage of 150,000, which is a liability. He also has a cottage worth of 45,000 is an asset, and a furniture value at 35,000, which is an asset. He has a car worth of 45,000, which is an asset, a bank loan for 25,000, which is a liability, a credit card balance of 1,000. He has 6,000 in his checking account, which is assets, and he also has a 10,000 in an investment saving account, which is an asset too. And then it also have 54,000 in his RRSP. Let's see what we can do. One thing that we need to remember before we make this net worth statement is where do we put assets and where do we put liabilities and net worth. Like we said before, we put assets on the left side according to the liquidity formula, like the ease of how you can convert those assets into cash. So here we have current assets, those assets that you can really convert them into cash. We have checking, it's already in cash. We have saving, it's also already in cash. And then you get the total of that current asset, which give you 16,000. And then the next step, you have to record capital assets. Capital assets, those assets, they are not cash, but you can easily sell them and get a cash. So those are like furnitures, which is at 5,000, cottage, which is 45,000, houses 200,000, a car 45,000. The total of capital asset give you 325,000. We have other assets. These assets is RRSP, which is 54,000. So on this side, we have a total asset of 395. So this is the left side of the equation, which is asset. Let's go to the right side of the equation. It started with liabilities. We have to calculate what is current liabilities. Credit card. You can easily pay off credit card once you get cash. And then you have this total current liabilities is 1,000. And then we come back to long-term liabilities. Long-term liabilities are like mortgages. Some mortgages range from 15 years to 30 years. So those liabilities will take you some time to pay them off. So you call them long-term liabilities. So you have mortgages, which is 150,000, and you have bank loan of 25,000. Maybe it should have been the other way around. Total long-term liabilities will be 175,000. And then now you have that total liabilities, which is 170 is 176,000. When you add long-term liabilities and current liabilities, you get 176,000. Now let's calculate what is net worth. At the beginning, we said net worth is you take total asset minus total liabilities, and then you get net worth. So now we have 395,000 minus 176,000. So you get 219,000 as your net worth. And then your statement will balance when you add that net worth plus liabilities. So you get the same amount as on this side. Explanation of the above diagram. We have total asset 395,000, total liabilities, which is 176,000. Calculate net worth. Net worth will be your total assets minus your total liabilities. Give you the net worth. This is your financial standing. How much is left when you get all the money you make from your asset, from your job, from your things, and then pay everyone who owed you money, and then how much is left with you. Okay, so and then the fundamental, you can arrange them and put everything in.